Hi, welcome to Slay the Spider. I'm Jim B, and I'm the creator and host of Slay the Spider. Shares of the S&P 500 are called S&P Depository Receipts, SPDRs. Spiders. Slay the Spider means I intend to beat the S&P 500 quite substantially. For the week ending April 29, 2022, the movement was very negative with 38 of 40 sectors declining. In healthcare, all three sectors declined and healthcare crossed to the bear side. In media communications, all three sectors declined. In technology, all four sectors declined and semiconductors crossed to the bear side. In consumer discretionary, all six sectors declined. In the financials, all six sectors declined. In the industrials, all seven sectors declined and steel crossed to the bear side. In the others group, two sectors, forest products and textiles, remained unchanged. The other nine sectors all declined, and oil services crossed to the bear side. For the week ending April 29th, 2022, two sectors were unchanged, 38 sectors declined. Four crossed to the bear side, zero crossed to the bull side. There's now 23 sectors on the bull side and 17 on the bear side. Overall, the market score dropped from 30 to 17. The S&P 500 closed at 4132, down 140 points, or about 3.25%. The Dow closed at 32,977, down 843 points, or about 2.5%. Nasdaq closed at 12,335, down 505 points, or 3.93%. Second row in a week, it's lost 500 points. This last week, 406 stocks went from a buy signal to a sell signal. There were net 8 new listings. There are now 30% of stocks on buy signals and 70% on sell signals. Overall, our market score changed from 30 to 17. For the first 17 weeks of 2022, the S&P 500 is down 13.3% and Nasdaq is down 21.2%. Energy year to date is up 37.3% and is far and away the best performing sector. For the first 17 weeks of 2022, healthcare is down 7.5%. Media communications is down 24% and is the worst performing sector of 2022. Technology is down 18.8% year to date. Consumer discretionary stocks are down 20.3%. Finance is down 11.6%. The industrials are down 10.1%. Real estate stocks are down 10.1%. And basic materials are down 6.2% and are the second best performing sector behind energy. For the past week, the S&P 500 was down 3.3% and Nasdaq was down 3.9%. In the past week, energy was down 1.4%, healthcare was down 2.5%, media communications were down 3.8%, Technology was down 1.2%, surprisingly second best. Consumer discretionary stocks were down 7.3% and were the worst sector performance for the week. Finance stocks were down 3.3%. Industrials were down 3.4%. Real estate stocks were down 5.6%. And the best performing sector was basic materials, down 0.8%, and even included beating energy. For the week ending April 29th, the 10-year Treasury bond yields declined from 2.908% to 2.887%, essentially flat. Year to date, yields are up from 1.51% to 2.88%. Subscriptions are available for $12 a month on an annual contract or $15 a month on a month-to-month contract. I've been producing the Slay the Spider Circle since 1998 and using it to manage private client assets. I've been nearly completely out of stocks for the past year. My portfolio performance is now well ahead of the S&P 500 and NASDAQ indices since I went into cash. That's the total idea behind Slay the Spider. Outperform the indexes in both up and down markets. Now is an excellent example of cash beating the market substantially. I'm looking forward to buying many of the stocks I owned previously at prices well below what I sold them for last year. I will then own more shares going forward, in some cases twice as many. Sure, there were a few stocks I wish I had kept, but in total, I'm more than happy avoiding this